Good afternoon, and welcome to the webinar of Baltic Horizon Fund, the presentation of Q4 results of 2025, and as well some remarks and conclusions and overview of the upcoming um, new units offering. Hereby, on behalf of the fund, I would like to elaborate on the results and also the situation of the fund, as well the reasons of the upcoming equity raising and all the associated topics around it. We have received a few questions before the webinar, and hopefully I will answer them during the presentation. If not, then happy to receive the questions on the question panel, and I will take them at the end. So hereby is the let's say KPI overview table that we regularly present to give the guidance for investors of the results of the fund and the situation with the occupancy, net operating income, and as well the cash flow generation. So gradually overall at the fund level, we are moving gradually up with our occupancy, and the main reason for the increase this time is coming from Europa Shopping Center, where we have leased out in the fourth quarter much of the third floor to tenants in the sports and health area. So also we have made NOI around 3 million euros. This is after the let's say the adjustments when it comes to bad debts and provisions and write-offs. We had a larger write-off in or provision in Q3, which affected our NOI, and it also affected our NOI somewhat in Q4. But we are at the 3 million line and hopefully to exceed that next year. We continue amortizing our debt, and that's why our total debt outstanding continues to decrease, and as well the average cost of debt, which in our opinion is still somewhat higher than we would like to see on a long-term basis. We did have valuations at year-end, and the result of the valuations decreased the values of the portfolio, but also increased the LTV. And I will talk more about that in the coming slides as well. We continue to invest into a fit out of our properties and maintenance of our properties, and this is also part of the reason why the fund remains cash flow negative. However, we have made quite a bit of changes over the past fourth quarter, also when it comes to property and asset management, and have worked to find even more ways how to cut costs, and we hope to continue that in the upcoming quarters. This is, I think, a good visualization also of the fund where we are at the moment, and maybe a comment on the average rent, and this is partially for two reasons. There's a small drop in Q4. One reason is that our anchor tenant in Vainodes for the past several months have been paying discounted rent. And beginning of next year, we expect to implement the fit out plan there, after which the rent should recover in the course of the year. And the other reason for Q4 was that we included in the area of rented area, we included some tenants in Europa which haven't yet started to pay rent. So we expect this figure to stabilize also in the upcoming quarters. And when we have these changes in tenants, we of course monitor very closely our cash and where we commit our cash, but we do need some fit out investments in order to welcome these new tenants that will start to pay rent and increase in our NOI accordingly. Some words about the valuation and each of our properties more specifically. So we did have a write-down of approximately 20 million end of last year, and it was due to several reasons. And I think one key reason is that some of the discount rates in our valuation reports were reviewed downwards as well. The evaluators had a more conservative view on the leasing potential and potential rates of rental levels in some of our properties, which did influence the valuations negatively. And we did have some improvement in S27 and in some of the Estonian properties, but we acknowledge that, and we will continue to still, fight for tenants at reasonable rental levels, and we do expect many of these new tenants to move in the coming quarter, especially in Europa shopping center, and to start paying rent. Also to note that in Vainodes, the occupancy here is 100%. However, the rent payment from the anchor tenant has been at a discount during this period of fit out. And the similar stories is for Lincona, where the occupancy expected to drop in the first quarter because of the moving out of the second largest tenant, Swedbank, and that did have of course also a impact on the valuations. At the same time, in Europa, as I mentioned, we're making good momentum to lease out the third floor and have several ongoing negotiations. And in North Star, the occupancy rate has been improving gradually. In Upmalas and S27, the properties remain half rented out, and in S27 we have attracted smaller tenants on top of the school to move in and start paying rent at quite attractive rental levels for us. And we also have now the school start paying full rent from the 1st of January. So they were also at a discounted level for a few months at the end of last year after they moved in. So we should expect some positive movement there. In Sky, also we had negotiations with the anchor tenant, so the agreement was reached and signed. Also at somewhat of a discount for the anchor tenant in the upcoming periods. So there's a lot of movement in the portfolio in our properties, especially in Latvia nowadays. In Estonia, Postimaja and Apollo Plaza are fully let, continue operating very well. And in Pirita, the situation is also quite stable, and we continue to work with the satellite tenants that are in front of the Rimi area. And more specifically, there are, I think, more news to be noted in the next quarter. About the financial results, and we compare it here on a quarterly basis to the previous year. So overall, like to like, NOI was slightly higher, and on a quarterly basis as well, we are again back to the 3 million euro level on a quarterly basis, and we did have overall for the entire year still quite a substantial amount of costs that are borne by the landlord. And as the total generated, rental income for the fund was about 15 million. So we still have work to do with the triple netting of our leases and increasing the occupancy of the fund, so that would also bridge the gap towards the higher rental income level that we have on a gross basis. Then I think it's worth to mention that we're now starting to see results on the administrative expenses side, and for the entire year we did have approximately 400,000 euros less of admin expenses in 2025, and we also had the delisting process completed as of last year in November. So those expenses are also gone in this year's financial statements, and hopefully the administration expense level of around 400,000 in Q4 gives good projection for the administrative expense level also in the year of 2026. We have here also losses on disposal of investments. So we had it in last year when certain agreements were still valid with some of the buyers of the properties the transactions that we had back in 2023, namely related to NOI guarantees of certain vacant properties. So those obligations have also ended, and also I think, of course, what has influenced our profit and loss statement most were the valuations, and thus resulting in the loss of roughly 19.12 million euros. I think we've also evaluated this from a perspective where if one would exclude the valuations, then based on based on our understanding, we would have made a small profit on a quarterly level in the last quarter of 2025. Something to highlight, I think, on this slide is that the reduction in trade receivables. So we've provisioned. We've been more conservative in provisioning certain receivables. That's one reason why it has decreased, but as well, we have recovered some of the receivables. So a lot of focus continues to go into debt collection and the management of debts and tenants. So the number has improved, and we continue to monitor that very closely. In in just to remind that in Q3 we wrote or we had a bad debt allowance of roughly 500,000 euros, and wrote off around 74,000 euros of receivables, and in Q4 it was slightly smaller number. Um, and now more, I think, precisely on the situation of the fund. As you can see, the cash and cash equivalents of the fund are around 5.4 million euros as of today. And this is also a place to note that around 4 million of that cash is restricted for us for operational needs for reasons that or based on the agreements with our financiers, with our lenders. So the liquidity situation of the fund remains quite challenging, and we have therefore continued to look for a solution in that regard. As you know, we have worked on several disposals which have not ended in acceptable transactions for us, and as we have said so in the past, there is another way how to improve the cash situation of the fund is to raise additional equity for the fund in order to improve the liquidity. And currently, these are the preparations that we have made in order to make sure that the fund will be going concern and will have sufficient operational means, to continue management on a daily basis and as normal as possible. Some words about the lenders and the financial financing side of the fund. So the cost of debt has slightly been reducing, but we need to make sure that we get more competitive situation in that regard, and we know which are our more expensive debt, and we look how to decrease them as soon as possible. Due to the valuations, yes, we did have the LTV increase to 64%, and just to make sure that everyone understands, LTV covenant is something different than an equity ratio. So we calculate them both, and this is it depends on what sort of agreements we have with financiers where certain covenants are more important than the others. Now, a lot of work has um, been going into refinancing and prolonging our Latvian loans in the last quarter. And that mainly um, refers to Vainodes loan, S27 loan, and Sky loan. So those properties have now been also merged to one entity. It's called BH Riga, and um, it has contracts with one financing entity where negotiations have been ongoing, and we're happy to say that we have reached an agreement with the bank for a prolongation of these loans for 2-year period. As well, Pirita loan has been prolonged. So just that there are a few conditions for the financier, and one of them is that we do strengthen our balance sheet and and increase our liquidity buffer so that we can continue our operations. Then, as you might also understand, the timeline in that sense is quite tight. And we have also announced that due to the valuations, which were done by external evaluators, we are in non-compliance with an equity ratio covenant of the bonds. The covenants and other agreements with other financiers have been solved. We are meeting those covenants or have received waivers or and so those loans are fine, but we need to address the bond covenant, and one way to address it is exactly by raising new equity, getting new equity on the balance sheet of the fund, so that the covenant breach will be sorted, and we do have certain period of days to do it, and we also have to keep it in mind when continuing with the um, offering of the new units and raising additional capital for the fund now in the coming weeks. One comment on the hedging of our debt. So we are not taking any new hedges at this point. So we have to make sure that that we get our finances improved and the balance sheet strengthened first, and then we can look at reasonable hedgings in the coming quarters. So we monitor, of course, the process on a quarterly basis, but yeah, here at the moment, the hedging of the loans is not reasonable given our situation and also the terms of certain of our loans. So, without further ado, I'd also like to talk more about the equity offering, and it's been a long process for us to prepare, and as we have as a management company, as a fund, have gone through major changes, especially during the course of the last 6 months. So this has been the key priority for our internal discussions, also with our investor base and all our fund supervisory board as external advisors. So as was proposed and decided by the units holders in December last year, we have the mandate to raise up to 25 million euros from only the existing investors, given the big discount of the offering. And again, just to be crystal clear, our aim here has been to make sure that all current investors have the equal chance to participate pro rata and defend their position in the fund. Also help the fund to increase its liquidity position and decrease the bond so that we can more easily work on the asset value increases and the tenant mixes then and continue to increase the operational profits and net operating income of the fund. So the unit's price has been fixed at the meeting. As well, important to note is that the unit holders have to check what is their current holding as of 20th of February 2026, sorry. Because based on that amount, they can participate proportionally in the upcoming offering. As well, just some legal notes here that as mentioned, all existing investors can participate, and Estonian investors may have slightly a more convenient route through their internet banks directly, and but the main recommendation is for all investors to contact their custodian, their bank, and ask how this could be done. So either through internet bank or through just giving instructions for the bank agent. So we hope to raise sufficient amount, and we as a management are committed, and we believe that at the moment that minimum amount which is required to address these imminent liquidity needs of the fund, restore sufficient equity ratio levels, and quite frankly ensure the going concerns of the fund will be met with this offering. We don't realistically, unfortunately, expect to raise 25 million, but yes, we do have belief and confidence that we raise sufficient amount to continue working on the fund and its finances. So some very direct messages on the utilization of the proceeds. So we have a few scenarios here as examples that that how the use of proceeds will be used in case we raise 8 million. So we do have a requirement or agreement with the financier of the 3 Latvian properties, as mentioned before, that we inject approximately 1.5 million into the company to fund the capex and pay the yearly amortization upfront. For that, we get we receive a 2-year prolongation of the loans, and as well we will receive some funds for the ongoing liquidity needs and some fit-out projects that we have ongoing that would increase the NOI of the fund. And and the remainder basically will go to reduce the bond. So we do uh, encourage and expect and hope that many investors will participate so that we could pay down the bond um, as much as possible. So, for example, if we raise approximately 11 million euros, then around 6 million euros of the bond will be repaid. And if we raise 14 million, then half of the bond will be repaid. So our direct let's say action will then follow, and of course bond continues to be the most expensive item on our debt debt list. Some more information about the pro rata offering. So hopefully this table makes it crystal clear that for various types of investors, as we have thousands of them, how to subscribe for the units. And first of all, it's important to check as of today, actually, sorry, how many units an investor holds, and then apply the coefficient of 1.1782. So to get the maximum amount of units that could be subscribed for. There is some rounding factors here just to consider, but hopefully this table clears it and makes it more simple. So as well, um, as well, the timetable is below here. We have an offering period from the 23rd of February to the 3rd of March. It's relatively a short period, but we also have to take into consideration the deadlines that we have, for example, to remedy our bond non-compliance of that covenant, and otherwise the bond will become even more costly. And as well to make sure that we have the cash on our balance sheet to continue our operations and make decisions related to certain operations. The allocation decision we will make very quickly, and then investors will receive their confirmations. By now, 9th of March, we hope to have all of our subscriptions settled. And in case there are some technical difficulties, then we will, together with certain investors, if possible, find solutions, and we still have a little bit of time after the 9th of March to do it. But hopefully, there will be no technical issues in the custody side. But as we do have a very diverse investor base, so we have that flexibility. Last but not least, I would like to draw attention also to the offering document that we have available on our website, and it has been disclosed. The link has been disclosed together with the announcement. There are clearly, risks involved in this investment, and not to mention, the geopolitical the winds that we have seen, and as well, the liquidity challenges and property needs. So please do get acquainted with the risks of such an investment, and they are, I think, quite elaborately described in the document. But as mentioned before, the management remains committed and believes that the minimum amount required to address all these imminent issues, liquidity needs, and equity ratio levels, and certain operational needs that will be met with the understanding of the interest of the investors in this offering. So again, we encourage everybody to consider this offering very seriously and and in order to continue our journey together. Let me check if I have some answers, and so um, there's a question on the insider ownership and willingness to contribute into this offering. So what I can say is that the management and together with the owners of the management um, have been investing into this fund, and myself personally as well bought more units now in the previous open windows that we've had. So I personally plan to participate fully pro rata, and and I know that we have a strong interest to participate also from many of the insiders. So and I think that also gives us somewhat of confidence in the end result, but we will see the exact numbers then now during the offering period, and once the actual process begins. We have yeah, well, it is a question on the minimum necessary amount. So um, we believe that um, let's say we have a condition with our financier in Latvia that we should improve our balance sheet by at least 7 million euros. So we believe that we are capable to do that in the coming offering. Um, as said, we do expect and hope that investor participation in this pro rata offering will be higher, so that together we could continue paying down the expensive bond. If the offering is not fully subscribed, then the terms of the offering are very clear about it, that no investor can subscribe for more, or let's say take advantage of such discounted offerings. So everybody uh, everybody without any exception will have ability to subscribe only on a pro rata basis, and these are the rules of the game for this offering, which is, as mentioned before, directed only to existing unit holders. So again, we have certain examples here for the equity offering result. So 25 million would be the maximum, but um, but we believe, yes, that again, but we will be able to meet the terms of the financier and continue operating the fund um, on a normal level. But the higher the participation, the let's say quite simply, more money will be left over for the equity investor, and more of the bond will be paid back. So that's our goal, priority, and it remains a priority also, most likely after this offering is completed in the coming weeks. So thank you very much, and as well for an encouraging um, comment here also in the notes that that we continue to work on the portfolio, on the financing side of things. And I think the property and as the asset management team has been also mentioned in the quarter report, has been brought closer to the house in-house basically. So we believe that we have the strongest team um, in the history of Baltic Horizon to continue its operations, and we'll give our best to restore and create value for the properties when hopefully also the environment gets better on a longer term. But it is step by step, and the next step is to capitalize the fund and improve the balance sheet of the fund and the liquidity situation. So once again, thank you very much. And in case of any questions, please don't hesitate to let me or our colleagues know. Have a nice day.